What age do you want to retire? 40, 50, 60, more? Do you know how to plan your finances so you can retire early? Hey there, fun financial wizards. Welcome back to Fun Financial Insights, the place where we make the world of finance exciting and super easy to understand. In today's episode, we're diving deep into the wisdom of one of the greatest financial superheroes of all time, Warren Buffett. He's often referred to as the Oracle of Omaha, and he's got some fantastic insights that can help you retire earlier and wealthier. But first, let's meet our financial hero, Warren Buffett. He's like the Iron Man of investing, a true legend. And what's super cool about him is that despite being 92 years old, he's still running one of the world's biggest companies, Berkshire Hathaway. This guy is not your typical retiree, but that's what makes his advice even more valuable. He could have retired by the time he was 30 if he wanted to, but he didn't. So there's a lot we can learn from him. Now let's jump into the key lessons from Warren Buffett that can help you retire earlier and more comfortably. Lesson 1 is all about why cash isn't king. You see, when most people think about retirement, they imagine having a big pile of cash that they can swim in, like Scrooge McDuck. But here's the truth, folks. Having a lot of cash isn't the best long-term strategy. It might make you feel safe, but it's like burying your treasure in the backyard where it won't grow much. Buffett tells us that cash and cash equivalents are not great long-term assets. They don't pay much in terms of interest, and the value of your cash might even decrease over time because of something called inflation. Inflation is like that invisible enemy that makes everything more expensive. So what's the solution? Invest some of your money in assets that have a higher potential for growth. Think of these assets as your sidekicks. They can be shares of great companies or even properties. By doing this, you're putting your money to work, making it grow over time, and the sooner you start, the more money you can grow. Imagine planting a tree in your backyard. The sooner you plant it, the taller it will grow. But remember, don't put all your eggs in one basket. Diversify your investments. Consider it as having a mix of different superhero friends. For lesson 2, we're diving into investing prudently in high-quality assets. Buffett says you should buy assets the way you'd buy a house. For example, if you want to buy an asset like a stock, this means you should have an understanding and like the company so much that you'd be happy to own its stock, even if the stock market didn't exist. What does this mean? Well, think of it this way. Let's say there's an amazing team that plays your favorite sport, and you have a chance of owning that team. You'd want to have a piece of that great team that's super strong and reliable and have the odds of winning, right? Buffett is a master at finding these superhero-like companies. Some of the stocks he owns, he's held on to since 1960. He didn't treat them like toys to be tossed around. He recognized their true power and held on to them. This lesson teaches us that you should aim to invest for the long term. You're not trying to make a quick profit and then run away. Instead, you're partnering with these superhero companies and letting them do their thing. That's how you can build your retirement fund, by being patient and not rushing to the next exciting thing. Lesson 3 is about not getting spooked by stock market crashes. Buffett's tip is simple but powerful. He says that when the market crashes, you should actually be happy. Why? Well, when the market fails, it's like a huge sale where you can buy great stocks at a discount. And remember, for every seller in the market, there's a buyer. Most people lose money when they panic during market crashes. They sell their investments because they're scared. And guess what? That's like locking in your losses. The market might take a little beating, but it's always bouncing back. So if you hang in there, you're more likely to come out on top. Think of the stock market crashes as temporary challenges in your financial journey. You don't want to bail out during these challenges because in the long run, you'll be missing out on tremendous gains. If you're finding these lessons helpful, don't miss out on the rest. Subscribe to Fun Financial Insights for even more mind-blowing lessons and ideas on retiring early. And embark on the second half of this incredible adventure to own your future. Hit that subscribe button and let's continue this journey together. Now, before we wrap up this epic lesson and consider a few assets we can invest in, let's take a look at some extra wisdom from Warren Buffett. He's like a mentor sharing the secrets of the trade. First up, Buffett also talks about having a purpose. Retirement isn't just the end of a story. It's a start of a new adventure. Many retirees face health issues when they don't have something to look forward to each day. So when planning your retirement, think about what brings meaning to your life. Maybe you want to travel the world, start a cool hobby, or even begin a new business. Your retirement should be a stage of new beginnings, not the end credits of your movie. Buffett's wisdom continues with learning from the mistakes of others. You don't have to repeat the blunders of those who have gone before you. Take a look at the folks who panicked and sold their investments at the bottom of the market in early 2009. They locked in their losses, and they could have had massive gains if they waited. So when the next financial storm hits, don't rush to hit the panic button. Remember the lessons from the past, and you'll be better prepared to weather the storm. It's like having a map of all the challenges on your superhero journey. Finally, Buffett teaches us not to worry too much about leaving a massive pile of wealth to our kids. He believes in providing for them, but also making sure they're capable of building their own financial future. A large portion of his wealth is going to charity, not just his family. You can learn from this too. It's essential to care for your children, but don't get so caught up in leaving them a mountain of money that you forget about your own retirement. Balancing both can be challenging, but it's like learning to juggle. You can take care of your family while ensuring you'll enjoy your retirement when the time comes. Now that we've got all this wisdom from Warren Buffett, let's talk about something essential: asset classes. You see, different types of investments are like different types of superheroes, each with their own superpowers. Understanding these asset classes is crucial for your financial journey. Stocks represent ownership in a company. When you buy a share of a company's stock, you own a tiny piece of that company. If the company does well, the value of your share goes up. But if it struggles, your shares can lose value. It's like being part of a football team. You celebrate victories together, but you also face challenges as a team. When you buy a bond, you're essentially lending money to a company or government. They promise to pay back your initial investment plus interest over time. Bonds are generally considered more stable and less risky than stocks, but they might not offer as much growth potential. It's like having a trusty best friend who might not have super strength but is always there to support you. When you invest in real estate, you're buying property or land. Real estate can provide rental income and potentially appreciate in value over time. It's like having a money printer that can generate a steady income. Alternative investments are quirky and unique. You might not see them every day. They include things like real assets, gold, art and collectibles, hedge funds, private equity, and even cryptocurrencies like Bitcoin. They can be exciting, but they come with high risks and might not be suitable for all investors. Fascinating, but not always the safest bet. Now let's talk about a strategy that can make your financial journey even safer and more exciting: portfolio diversification. Diversification is like assembling a superhero team with different powers to tackle different challenges. In the financial world, it means spreading your investments across various asset classes. Why is this important? Well, let's say you have all the money in stocks. If the stock market faces tough challenges like a villain attack, your entire portfolio could be in danger. But when you diversify, you're like the Avengers, ready to handle any situation. Here's a simple example. Imagine you have a mix of stocks and bonds in your portfolio. If the stock market faces a crash, your bonds can act as a shield, reducing the impact on your overall wealth. And when the stock market recovers, as it always does, your portfolio can come back stronger. So remember to create a diversified portfolio that includes a mix of stocks, bonds, and maybe even a touch real estate. This way, you're not relying on a single tool. You've got a whole team to help you achieve your financial goals. So there you have it, financial genius in training. Thanks to the wisdom of Warren Buffett and some fundamental lessons in the asset classes and portfolio diversification, you're now better equipped for the financial journey and to retire early. Your financial journey will have its share of challenges, but with the right knowledge and strategy, you can conquer them and retire early and wealthier. So keep learning and keep investing and stay committed to your financial goals. Who knows, maybe one day you'll be the hero inspiring others to financial greatness. If you found this episode helpful, don't forget to smash the like button and subscribe to our channel for more exciting financial adventures. And as always, stay curious, keep learning, and remember that you're the true superhero of your financial story. See you in the next episode.